Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Ethereum chart, as Ethereum has just printed the death cross on the daily candles. So with that being said, let's get right to the charts. And as I mentioned, we are looking at the daily candles. That's what each one of these candles represents, would be a 1 day period of trading Ethereum USDT on the Binance exchange. And a couple of days ago, with the close of this candle and thus the open of the following candle on Friday, September 1st, today is September 4th, that price action confirmed the death cross, where the 50 period moving average crossed down below the 200-day moving average. The 50-day moving average is the yellow line. The 200-day moving average is the blue line you see on the chart, and you can see we definitely get the crossover. And in fact, over the next couple days, the 50 EMA is continuing to drop. And so the death cross is considered to be a bearish signal. However, that's not always necessarily the case for Ethereum. In fact, out of 6 death crosses, 3 have been bearish, where the other 3 have been, I guess, technically bullish. But more recently, the August 2nd, 2021 and the January 28, 2022, which would be the most recent death cross on the daily candles, you can see each of those death crosses over a 12-month period did result in almost identical sell-off of around 38%. And so now really the question is, will ETH sell off another 30-some% on this death cross? And if it does, that would be a pretty steep sell-off. Let's take a look and see what we might be looking at. And so if ETH sold off, again around that 38%, ETH would be retracing back towards like around 1,000 USDT. So that would be a pretty painful sell-off from 1,600 all the way back to 1,000. Now, with that being said, we can drop in the Recon AutoFib retracement levels to look at possible levels of support before ETH would sell off, for instance, all the way to 1,000. I personally don't think that's realistic, but in the world of crypto, technically it could go to 0, I suppose. And so the first level of support currently for ETH more than likely would be back here at the bottom of this wick on this candle, and that is coming in around 1550. I think for certain that would be your first level of support. If that level fails to hold, however, then the price could drop down here to the 1272 level, which would put ETH's price at around 1400 USDT. Now, beyond the 1400 level, you're looking back at the 1618, which would put ETH's price at around 1250. Now, beyond the 1250, then you're looking back at that $1,000 range. And so, with that in mind, the key levels of support for ETH would be 1550. After that, you're looking at 1400 and then around 1250. Beyond that, and ETH could be seriously in trouble, headed back down to that $1,000 price level. Now, on the flip side, if this happens to be one of the times that the death cross ends up being bullish and not bearish, then the first level ETH's price needs to get back above is the 1650. It needs to get above and hold above the 786 level, which is at 1650, which that number, a 1650, a round number like that, is a psychological level as well, and has in the past acted as support. And so we would look for that level to become support, and then perhaps ETH's price could move up to the 618 level at around 1733, which in reality probably closer to the 1750, where this wick comes in and gets rejected. that would be a valid zone of resistance at this 618 level. You see it does come right up into it and then gets rejected and sells off. So definitely probably the first test for ETH bulls if they plan to get the price higher. After that, the 50% level, I'm not so sure that really comes into play. The level I would actually be looking at is the 382 Fibonacci retracement level, and that's coming in at around 1850. And if we look back and check our 6, we can see that was a very strong level of support before the big breakdown. And unfortunately, sometimes these strong levels of support flip into resistance, and that is very likely to happen. This level is more than likely going to present a very strong level of resistance for ETH's price on the way back up. So 1850 really is the level ETH's price needs to get back above and hold above before I think you can get too bullish on ETH's price action. Now, with that all in mind, if we drop in the Recon EMA ribbon, you can see that the ribbon, ever since ETH pretty much lost the ribbon and has closed below the ribbon, it has been acting as resistance. And in fact, most recently on the pump of last week, ETH's price just made it into the bottom of the ribbon and only to be rejected. And obviously after getting rejected, it printed that death cross, and so ETH's price really is looking bearish when you add in the death cross, the resistance levels on the Fibonacci retracement, and obviously the CMA ribbon. The fact that the reds and yellows are above your greens on the moving average ribbon, that is also a very bearish signal, and the slope to this 120-day moving average is also starting to trend down. And so right now, everything points towards bearish price action for ETH. So I think that's enough jaw-jacking for this video. I really just wanted to point out that ETH did print the death cross, and a death cross is a rather substantial signal when it comes to tactical analysis. Now, with that being said, I do plan on making more tactical analysis videos for ETH, so you might want to shoot that subscribe button so you don't miss out on those future videos. If you like this video, do me a favor, spike a like. If you would like to see videos on other altcoins as far as tactical analysis, drop those in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.